Hello dear crypto friends and welcome to this latest video, and today I would like to talk about why I don't use Eliott wave theory. Why I think that Eliott wave theory is not always to be trusted. I know I will offend many people with that. I will probably get more downvotes than usual, but I am willing to take that risk because I always want to tell you my honest opinions about certain indicators, what works, what doesn't work, and so on and so forth. Let's first start by seeing what Eliott wave theory even is. Well, the basic principle of Eliott waves is surprisingly simple. You know, this guy Eliott in the 1930s came up with this theory that markets advance in 5 waves to the upside. So 1, 2, 3, 4, 5. And then in a correction, in a bear market, they descend in 3 waves down, A, B, C. Okay, that is the principle. That is the super simple principle of Eliott waves. So it's shown in this drawing here. We have wave 1, wave 2, wave 3, wave 4, wave 5. Okay, so this is like the bull market. The bull market consists of 5 waves, and then we have the subsequent bear market or the corrective structure, and it's called A, B, C, 3 waves. Okay. And then you can subdivide those waves again like a fractal. Oh, we are again at mathematical fractals. They just seem to follow us everywhere. So the first wave, we can subdivide it in 5 waves again, right? Because this is a small bull market in itself, right? The first wave, it goes up, so I can subdivide it again into 5 waves. And this wave 2 that goes down, we can then again subdivide it into 3 waves, because we said on the way down we go in 3 waves A, B, C. We say we are in, for example, if we are here, we are in wave 1 of 1, and then we are in wave 2 of 1, wave 3 of 1, wave 4 of 1, and wave 5 of 1. And we do this consequently for all the other waves, okay? So the principle is really simple. And now you can use this theory to make some projections about future price movements in any asset class, gold, stocks, whatever. And we are of course interested in crypto, so for Bitcoin, right? So now I've seen many chartists using Eliott waves for Bitcoin, right? Let's look at the long-term Bitcoin chart. This is the monthly picture since the very beginnings. This is the logarithmic regression fit. You can, by the way, find this fit. It's a macro I use on TradingView. Someone else has written it. I have modified it over the years. And to fit the data better, you can download it yourself and experiment around with it. I have published it. I will link to it in the description box below the video. So now let's go into the weekly chart and let's deactivate our long-term trend lines so that we have a better picture. So now, where are we in Bitcoin if we use Eliott wave theory onto our wonderful Bitcoin long-term chart here? Where the hell are we? And before we continue, please make sure to subscribe to this channel if you don't want to miss any future videos and important updates, because I will do regular analysis of the Bitcoin and crypto markets and of course different altcoins. Thanks a lot in advance. So I've seen, for example, many chartists not long ago doing the following analysis. So when we start, we are of course in wave 1. But what is wave 1 here? Well, you have to find a wave. So this is the most clear structure. This is the first big bull market in Bitcoin from 2010 to the peak in May 2011. Then we have the first corrective wave, right? This would be wave 2. Then we go on and then we have wave 3, for example. Then we have a long bear market, and this would be wave 4. This would fit quite nicely, right? And then we would have wave 5. And what would that mean? Well, that would mean we saw before that after wave 5, we have normally a long bear market with a very long drawn out ABC correction, and the C takes us actually back to the level almost as deep as 2, okay? Or we are going really low. So wave 2 in our case would have ended at around $2, okay? So if we would have an ABC correction now, it would take us really brutally low. It would take us so low, it's ridiculous. So it would take us like to the $2 to $5 or $10 level, into that area, which is of course absolutely insane. And what happened? Of course it didn't happen. So we didn't get an A, B, C, right? We didn't go back to this super low dollar range. This is what Eliott wave theory would have predicted in that case. Okay, this would have been the Eliott wave picture, but obviously this, of course, didn't happen. What a surprise. So now Eliott wave theorists are struggling to find what is actually the wave we're in. And luckily, Eliott waves offer you many different possibilities to count what happened, because we are obviously not in a corrective ABC structure. What happens is, like, this was wave 1, wave 2, and this whole thing is a gigantic wave 3. You're laughing now, but seriously, I've seen chartists making that assumption. We are now in a gigantic wave 3, okay? Then we will get into wave 4, then a wave 5, and then we will have a massive ABC correction, like insane, like we will go so low, it will be crazy, right? So we would go from values of over 1 million back to values of a few $100s. So let's all collectively think, is something like that realistic? Is something like that realistic and applicable to such a crazy disruptive asset like Bitcoin? And it is very different from old assets like stocks or commodities, you know? It has a different behavior because Bitcoin is driven by mainstream mass adoption. But Eliott wave fans will still try to figure out in which wave we are now, because they apply this doctrine, this dogma, that there are always 5 waves up and always 3 waves down, okay? And they will apply it to every situation we are in, even if it doesn't want to fit, they will want to make the model fit. And that is exactly the problem with Eliott waves. You can always make the Eliott waves fit a narrative, okay? I could, for example, also say that this whole thing here was only wave 1, and then we are in a correction, and then this whole thing here was wave 3, and then this is wave 5, and then a bear market will come, right? Because we said 1, 2, 3, 4, 5, and after wave 5, a huge bear market will come. So if I would want to scare you now, I would say we are soon finishing wave 5, and we will have a huge bear market coming now with a huge corrective wave ABC that will take us down to brutally low price levels again, okay? I could say that. But I could also say, no, this is just the beginning. This whole thing here was wave 1, and we are now in gigantic wave 3, which will bring us up to over $1 million, and then afterwards it will be so nice because then we have wave 5, which will take us to tens of millions of dollars, and then only afterwards we will have the first real bear market. You see the problem with Eliott waves? I can make it fit my narrative. I can make Eliott waves look like I want them to look. And you know, the thing is with Eliott waves, sometimes they fit really perfectly. They fit really nicely, but sometimes they just don't. Sometimes Bitcoin does not behave in 5 waves up and 3 waves down. Sometimes it's more than 5 waves, and sometimes it's more than 3 waves. So for example, in the first bull market, this was actually quite nice. It fit really well. We have a wave 1, wave 2, wave 3, wave 4, wave 5, okay? We could still say, okay, nice, yeah, look, we have 5 waves up, and we could even say, yeah, we have kind of 3 waves down, because the first low was here, and then we had a bounce, and then we went down to this area. So we could say this is a wave A, B, C, right? And then we go to the second bull market, and we can say, okay, look here, wave 1, wave 2, wave 3, wave 4, wave 5, awesome. What about here? Wait, this cannot be, because it really didn't do a nice ABC structure. It was like some weird stuff doing here. So we need to find something now and say that this is now the ABC, and then this is a new wave. But wait, no, this is not clear. We don't have 5 waves here. So basically I need to discard those waves, or one of them, because it needs to be 5 waves. It needs to be 5 waves up, because that is what Eliott said. So we need to fit that narrative. So basically we have to say, okay, then probably this was wave 1, and then corrective wave 2, so probably this was wave 3 and that wave 4 and that was wave 5 then. Okay, so now it fits our narrative again, and now we have a wave A, B, C, which is also quite good. Yeah, actually if you look at it, it's actually more than one, it's like 5 waves down. So but that is not allowed to be the case, right? Because Eliott said no, so we have to make it like 3 waves. Okay, so we have to make it again fit our narrative. And then afterwards, after this long bear market, we have new waves, and it should be 5 waves to the peak again. But what? These are too many waves here. Look, we would have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 waves. 13 waves, but that doesn't fit our narrative that we have to have 5 waves on the way up, because Eliott said 5 waves, so we have to make it be 5 waves. So then we have to discard some peaks. So what is wave 1? Well, maybe it's that here. Yeah, that looks good. Wave 1, wave 2, and then here this is probably wave 3, wave 4, and that is wave 5, right? And we just discard all the others. We discard this here, we discard this here, we discard this here, we discard this here, we even discard this small corrective structure. You know, it's like we have to employ 5 waves, so we just discard all other waves that don't fit our view or picture. Then afterwards we should have had another ABC, like ABC. Okay, it again doesn't fit at all, but of course I have to have the 3 wave structure, right? So it has to look like this. And then we are going up, so I again need a 5 wave structure. So this is probably wave 1, wave 2, wave 3, wave 4, and then it has to be wave 5. And again, we just ignore these weird outliers here, like this one. It absolutely doesn't fit this here because it went far too high. And we just ignore, for example, this one here or this intermediary bump. You know, it's like you can make Eliott waves fit any chart or any narrative you want, because you can just sometimes ignore some intermediary waves to make it fit the 5 wave narrative or the 3 wave narrative in the case of a descending market. So to get back again to our big picture, where are we? Well, you will hear people saying we are in wave 3 now, in a gigantic wave 3. You will hear other people saying no, we are actually already in wave 5. You will hear other people saying no, we are in a new wave 1 because this here already was 1, 2, 3, 4, 5, and this here was already our corrective structure. It doesn't fit at all because it should go down much lower, but hey, what can we do? We have to fit a certain narrative. So a new wave count starts now with a new wave 1, 2, 3, 4, 5, you know. So that is the problem I have with Eliott waves, okay? Because you can always make them fit your narrative however you want, and they very rarely give me insights about future price movements, okay? I have never achieved to make a good prediction with Eliott wave theory, and I follow many chartists on TradingView who use Eliott waves, and I'm sorry to say this, but they also fail all the time. There is not a good example for me where I said like, wow, look at this guy. He perfectly foretold what Bitcoin would do based on Eliott waves. Like, look, this is amazing, this guy. He used only Eliott waves and made perfect predictions using Eliott waves, how high Bitcoin would go and what price targets it would reach. In 8 years, this has not happened even once, okay? But what has happened is that if you say Bitcoin behaves differently and you don't need this 5 waves up, 3 waves down structure, and you use a different set of indicators, then you can indeed make some very good predictions. You can say, okay, we are in this curved shape here, and we see that Bitcoin is having bear markets and bull markets. Okay, this is also pretty obvious. And what indicators worked for me, turns out the ones that work best for me are actually a really simple combination of only a few indicators. First, the stochastic RSI. It tells you when an asset is overbought or oversold. Then the RSI, the relative strength index. It tells you the deviation of an asset from the median value of a time frame where it was before. So it tells you, is the price rising too fast now? Is the move getting too aggressive and not sustainable? Or is this a sustainable rally or price move that is going on? Then I use the Fibonacci levels, so Fibonacci retracements and Fibonacci extensions. They work like a charm. Bitcoin really likes to hit Fibonacci retracement levels and Fibonacci extensions. It really loves to do that stuff. Then what I also use are, of course, support lines and trend lines in general, and resistance lines. So the basic chart structures, like for example, falling wedge, rising wedge, megaphone structure. I think volume is also a very important indicator, like is the volume rising or is the volume declining in a price move. I also use the Bollinger Bands because in my opinion they show me very often how the Bitcoin price is rising and how it's struggling to make the Bollinger Band deform basically. So whereas Eliott waves could not tell me right now what the Bitcoin price target for this cycle is, no chance. The Eliott wave theory could not tell you what the all-time high of Bitcoin and the crypto market in general is going to be. But with this model here, with the linear regression model, I can tell you that depending on when we hit the all-time high, we are going to be at least at 150,000. And if we hit it later, for example, in early 2023, we are at 233,000 and so on and so forth. These are very tangible predictions. I can also use Fibonacci extensions and Fibonacci retracements and tell you that based on these, we would get to about 300,000. This is the full Fibonacci extension. So these are some very tangible predictions. I can also tell you that based on the Bollinger Bands, we are running into a very strong resistance here, because every time we deform the Bollinger Band to the upside, dumps happen because this is just a very strong and aggressive move upwards and it cannot be sustained, so there need to be corrections. I can also tell you that based on the weekly stochastic RSI, we are in overbought territory, so it's likely that we have to cool off a bit before we continue our journey upwards. I can also tell you that based on the RSI, we are still in a bearish divergence. So this means this peak here, the 67,000, was higher than the 65,000, yet we failed to make a high in the RSI, and we are still technically in a bearish divergence that needs to be broken in order to confirm the uptrend. These are all things I can tell you from only a handful of indicators. But Eliott wave theory, you will struggle to find analysts that will tell you exact price targets and exact predictions with Eliott waves, and they will always change the Eliott wave count in hindsight when new data becomes available to make it fit the narrative. That's why you will not see me using the holy Eliott waves. And now, of course, many people will say, you are too stupid to understand Eliott waves. But I just don't use Eliott waves because I found in my 8 years of experience in the crypto market that they just don't work for me and they don't make any meaningful predictions. You know, I could not tell you how high we are going now in this market or where we are, and I would need to constantly readapt the wave count and rechange the wave count to make it fit the new data that becomes available every day. These are just my thoughts. I will always tell you what works and doesn't work for me. For you, it might be different. Maybe Eliott waves work perfect for you. Then I'm very happy for you, you know. Congratulations to you that Eliott waves work for you. But for me, they just don't. I hope you enjoyed this video nonetheless. And I would say have a nice day and see you next time.